What is going on, everybody? In this video, we're providing you a state of the market and stock picks for May 16th, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So as you can see, the market hasn't done anything coming into today. Again, this week wasn't going to be a big eventful day. At least nothing really scheduled. I say that, but with the understanding that a lot of Fed members are speaking today or over this week, and then we have Powell on Friday, and whenever he speaks, we need to listen because he can move markets. But with that being said, it's going to be pretty stagnant until we go into next week, where we get the FOMC meeting notes. And again, we are looking for more recessionary type information on the current market state, and understand that, again, the Fed has raised another 25 points after having multiple bank failures to this point. So the pain is not done as far as the Fed is concerned. So we're going to have to see how this thing does shake out. And on top of that, we do have the debt ceiling, which is right around the corner. And if June 1st is the actual date in which we run out of money, we are cutting it very close. Now, the administration, Biden did say he was going to speak to to reporters tomorrow, I believe. So that could, again, cause some intraday movement there. Again, the market is just really looking for some sort of news, and there is not enough news to really point in any direction. Obviously, there's still a lot of fear. That's why you're seeing a lot of volatility and movement in the bonds, a lot of action in the bonds because of what is currently going on. People are actually betting against the default with the thing to understand there is you don't want us to default, as it will essentially break the whole system, and that's the last thing you want to occur. And I don't think we're going to default, but that's not saying we couldn't get downgraded. And if we get downgraded, that in itself could crash the market. That's happened to us before, in most recent history, in about a decade ago. That did occur under Yellen and under Biden when he was vice president. So nonetheless, we will see what happens from this point. So again, my biggest key thing is to really watch what the Fed will say. Again, if they lean heavy towards any kind of or emphasize anything about a recession. Again, I highly believe that Elon has the best insight there, and he has stated that we are in a mild recession currently right now, and that it would continue to get worse if rates continue to increase. And we saw another increase shortly after. So being said, I think with inflation being high, that rates will potentially increase on the next June monetary policy. But again, we have a lot of time before then, and we'll have another core before that happens. I do believe, again, something I've stated is that I think we are very much, the Fed is very much way ahead of the inflation. If you just held it, I think we would be fine. But I think more so what he's trying to do is force the issue. And this is why we're continuing to see rate increases, because of the fact that they want this thing to break a little bit faster than what it's actually doing. Yes, we've seen some breaks. And then again, banks have gone eerily quiet. We get a bunch of bank failures and all of a sudden it goes really quiet again. And you get heavy manipulation from, the CEO of JPM coming out and essentially stating that they should make it illegal to short banks. And so, with that being said, obviously the banks are a key aspect, and something I've always talked about is the banks will always lead the market, and if you're manipulating the market to not be able to short the banks, that is heavily manipulated as well, right? And understand that doing that is not going to be fair game, right? And understand that markets are supply and demand, and you can't, because you don't want the failures to happen, even though people are already well aware of the massive leverage that banks take on. If you want to look back at FTX is their model essentially that they used is the same model that your government uses, but obviously FTX was one of those companies that obviously we haven't really heard much ever since the downfall of it. It takes a lot of time to essentially draw up that case, but ultimately understand that what they were doing is essentially what your government's been doing. And so, with all that being said, again, the markets are always heavily manipulated, so you have to understand that. Um, and the way the system works is you keep leveraging money, and then ultimately understand that the taxpayer is the one that's always going to be paying the bill. That's just the way the system is set up. It doesn't matter what happens, how you repackage things, the taxpayer will always pay the bill. If it wasn't for the taxpayer paying it, then you couldn't leverage anything, and the whole system will come crumbling down. There's some good books on this, and I highly advise that you read up on it, especially during a time like this when the markets are going sideways. I'm waiting for the next move, but currently, as of right now, again, we are just waiting for this thing to crumble, and it will crumble. We know what the end game is, and something I talked about. But the big thing being is that we have to find the catalyst that's going to do it. People aren't going to push it to the upside because we don't have, we can go to a pause state, but understand that the pressure that's already mounted against banks already to this point, into the consumer, to your neighbor, right? And then you're starting to see a lot more people starting to put houses, single family homes up for market. And something we talked about before is the wealth. Most people's wealth is in their homes. And if they're selling their homes, they're doing it. It's probably a last resort. Like they didn't want to sell their home. They want to put their house up for home, but they didn't have any other options. Either that or go bankrupt. And that's the last thing they want to do. So they're going to try to prolong, whether you go in survival mode, right? And so either you're going to start renting or whatever the case is, to hopefully stay above water till things recover, hopefully. And so all you need is a big enough wave of that to happen for this thing to really start getting carried away, right? And understand that these rates will not start being cut until you get some massive issue. You look back at in the 1979 is a really close comparison of what we're currently going through, and understand that rates were held were paused for a very long time before anything actually broke. And I think that's what Powell is trying to avoid, is having to wait too long. I think that's why he's been continuing to push the 25-point basis move in hopes that if he does pause, that'll be a short term. The last thing you want to do is pause and have to increase rates again, because then you would essentially cause a crash at that point, right? And that's the last thing he wants to do. So we're going to have to see how this thing is played out and then go from there. So till then, we are still in earnings. We're going to get a lot of value plays this week. So those are things to kind of watch. Those are things to be really interesting to watch, as they'll give you like insight into what's really going on with the economy. Something I said, especially value plays. They're not going to move the market unless it's like completely out of left field. Like it has to be like massive misses or something like that to be able to try to pull down the market again. This is why all your industry leaders have already essentially take the front part of the earnings. That way the market kind of knows what's going to happen, and then we go off from that point. But if value does really bad this week, that's definitely not a good sign. That could really lead to recession. And again, a lot of these things are strategically placed. So maybe there was a reason why all value is reporting this week, your Targets, Walmarts, Home Depots, because of the fact that maybe next week we get more insight into those notes and it says that we are in a recession, and then the market will finally correct. It's hard to tell. We don't know what that catalyst is going to be. There's a lot of potential events that could occur, events that maybe you can think of or not think of that could happen, that could cause it. And the majority of the time, it's something you don't even think of that kind of comes out of left field. Obviously, you can't think of every scenario. You try to think of as many scenarios as you can, but ultimately, we'll see what happens, right? And go from there and react, as opposed to assuming we're just going to go back to all-time highs. Things aren't better, and they're getting a lot worse. And the fact that the Fed continued to push it is the concerning part. And now if the Fed paused and we held and we continue to start pushing up is a different scenario. We're not seeing that, right? Like the Fed is continuing to push after failures. And so these are things you have to consider when looking at the current market state. So again, flat right now, still 4,200 is our top, and roughly the 45 is our bottom. So continue to watch that. Bitcoin has had a lot of problems since last week, especially with some weakness in crypto with the ordinals and the NFTs, the gas fees essentially associated with that. And then now you have the SEC coming out saying there's going to be more regulation on Bitcoin, which is a positive, but it really depends on this market because positive news really isn't taken positive. Negative news is kind of taken positive. Normally, this is why gauges are out of whack because of the way things are currently working. So, but Bitcoin, again, we'll really have to see what happens with this. It's starting to show weakness. It can't break the 3,100, 31K mark. We'll see what happens there. But again, that the 24 support is kind of what you have as of right now. We'll see if that will hold moving forward. But then we'll go from there. And then again, bonds are kind of really coiling up. Everything is coiling up for a big move. That should be really concerning, as I do believe this thing could really get pretty crazy and hairy here shortly if we get one piece of news that can do that. Now you got Tesla here today. Again, very choppy, but tech is looking very weak. It started to look a little bullish there, but again, rejected hardcore, filled that gap. Now it's just starting to die off. Again, I really think it's going to at least hit the 140. We'll see what happens when it gets there, but another thing to understand too is we do have options expiration by the end of the week. That could be additional sell pressure. That doesn't mean I have to sell right on Friday. It's anytime this week. So you may see some dumping with no news. That very well could be why. It's because you have a lot of money coming off the books by the end of the week. Then you got PLTR. Again, crushed earnings now starting to pull back. We'll see this thing will gap fill eventually here. If you can't hold over 10, it's not going to happen. These gap fills always essentially get closed at some point. It just depends when. I think this, again, given the current market sentiments, I'm waiting for this thing to pull back down so I can get in or add more to this position. I do want to add quite a bit to this position, so we'll see what happens moving forward there. You got BA, which hasn't done anything at all. The 220, the 195, we're continuing just to chop around here. Again, just everything. When everything starts looking the same, that means there's going to be a big move. And I always state this every time this happens. When you get big consolidation over all industries like this, that means there will be a big move, and it's normally a move to the downside. So just be mindful of that, because if you are in a bullish market, the market would push up. It would just chop up. It wouldn't just consolidate and then push back up, especially after a bear market, right? All of last year, and now all of last year, we've kind of just been sitting around the same spot and just continuing to consolidate for a big move. And you're talking about months and months and months of just consolidating. So again, it's really going to get nasty, I think, in my opinion. JPM looking weak. I still feel like it's going to completely fill this gap and be at least down to the 125. And like I said, I think it'll eventually fill this one as well and be down at the 109 here shortly. I think that move is coming a lot sooner than people anticipate. I think some people are thinking fall, but again, I think it's sometime between now and the end of June that is going to happen. Again, we're only about a month and a half out from there. Maybe even July. Maybe I'm wrong. I don't know. But ultimately, again, the market's not going to push up, right? As long as the Fed continue to raise rates, that should be a concern for you. And we deal in probabilities and understand that the more they continue to push is the higher the probability that something's going to break even more, especially after you're already starting to see banks, and understand that when banks start going under, the cascading effects that it has when a bank goes under and the effects it has on small business. And then understand this is, again, cutting into people's spending, right? And understand what that cascade into everything else that is currently being affected. So then you got GS, again, still very weak. We'll see if we can hold the 318, expecting it to make a lower low here, maybe the 289. If you want to go up, it needs to break essentially that 346. Bank of America, currently sitting at support roughly here at the 27 mark and holding roughly at the top of around that 30 mark. So if you can break this, could get pretty nasty. So we'll see there. But that's pretty much what I got. Again, I don't want to make these videos too long. We don't really have a lot of new news. We don't know what's going to be the piece that's going to sell us. So we just continue to be patient. That's all I ask. That's all I'm doing is just being patient. I have essentially taken position, again, not financial advice, on some bonds because I think the bonds will have a huge move on a pivot to the upside when that does happen. Also aka a crater in the markets. I think that's very much a possibility, especially on your longer term bonds. But we'll see what happens there moving forward. Again, the timing for that is hard to tell because if it comes in really fast, you may be doing emergency rate cuts and not even pausing. And so this is something we're unaware of, right? We know the pressure is continuing to be pushed on the banks, and then understand how quickly things can change and get even nastier than what they already are, and start causing a huge cascading event. And so we don't know exactly what or when that's going to happen, but we do know the end game. We're in the final stage. Let's let it play out and go from there. So with that being said, if you've made it this far, I do appreciate it. Go ahead and drop a like. Until next time, I'll see you guys later.